Welcome back. The pressure on the Adani Group stocks is relentless now. When we started the show, the Adani end stock was down 30% already. And as the circuit filter was revised, it's immediately hit a lower circuit from there as well, 35% lower. In fact, in this week itself, Adani end is down 63 odd percent. And that's a nifty stock that we're talking about. Giving it company is Adani Ports, as a result of which that too has extended its decline into double digits. So 13.5% shaved off on Adani Ports as well, and the other group companies too. As a result of which, the Nifty, which was marginally in the green as we started the show, has now moved into the red by about 15 odd points. And the pain in the mid-cap index has only exacerbated. We have around 2,300 stocks which are declining, as against about 500 stocks which are advancing at the lowest point of trade for the mid-cap index, and those crisscross lines at the widest difference away from each other, with the red line firmly on top. Talking about a couple of other stocks, however, an outperformer in the mid-cap index today has been Berger Paints. Remember, the results were weak for the third quarter, but the management commentary was rather positive with regards to the outlook going ahead, and they gained market share this time around with 6.6% volume growth, so grew faster than Asian Paints, which was the leader. So the stock opened in the red, understandably on account of the weakness that we saw in margins, but from there it has recovered and moved higher. But one stock which is under pressure from yesterday is Dabur. The company reported a softish sort of quarter in the third quarter, and thereafter as well, we are seeing incremental sell-off in the stock out there. At the low point of trade, down 4%. The company reported a 3% volume decline as against street expectations of a 2% volume growth. The India business grew by about 3.3%. The international revenue actually declined by 14%. We do have with us the management of Dabur. Mohit Malhotra, who is the CEO, joins us on the phone line. Thank you, Mohit, for joining in. While the quarter was weak, you did say that you've seen some green shoots in December. Can you give us a sense of how the fourth quarter looks, and as a result of which this entire year? Because, I mean, rural is recovering. The winter products, have delayed into the fourth quarter, so you'll get some sales coming in from there as well. 9-month revenue, you've done around 6%. You had guided for low double-digit growth. Your thoughts on the full year and the fourth quarter?
Right. So, hi, Mangalam. Thank you for having me. Yeah, the operating environment continues to be pretty challenging in quarter three for us, with most of the markets, as in the categories where people operate, are actually declining. But despite that, we've gained market shares across all markets, across all segments. So 90% of the portfolio, we've gained market share, strengthening our position in the market. So there is no cause of worry as such. I think the biggest factor which marked the categories declining was inflation, and consequently inflation, the consumption pressure, and which is more felt in the rural. But rural was more so till the October month. In November and December, we have actually seen green shoots coming in rural business, and rural has actually grown in November, December, and is carrying forward in the month of January also. And we were more impacted in the states of UP, MP, Bihar, where there was deficit rainfall by around 30%, and that is a high saliency for Dabur. So that was the only isolated area where we didn't do well. If you look at other markets of North, West, East, and South, all the places, there was a huge, good volume growth for us. Optically, our volume growth looks like -3, but actually in secondary terms, it is +3 because consumers are down trading. So that's why this is what is visible. In LUP, the saliency, the mix shift is leading to the value-weighted -3, but otherwise it is +3. If you look at CAGR's pre-COVID levels, our volumes are up to an extent of around CAGRs around 5.7%, which is the industry-leading volume growth. And market shares are going up, so no cause of worry. I think because the winters have got extended into quarter four now, quarter four are seasonal products like Chyawanprash, honey, they will be, and winter care.
Got it.
Mohit will be far better.
Right, Mohit, thanks for giving us those qualitative aspects. I want to request you for a couple of numbers now. What kind of a volume growth should we look at going ahead? Point number one. Point number two, ad spends as a percentage of sales. Well, a few quarters ago, I think it was 8-9%, or it's come down to around 6%. What's the number we're looking at?
Here, overall, ad pro has been in the range of in line with the top line growth. Top line growth is in the range of around 4%. Our overall ad pro is also in the range of 4% broadly. Our ATLs have gone down. The media mix has actually changed. We have put some money from ATL to consumer promotion and trade promotion. So what is visible to you is ATL, but otherwise our ad pros are in line with the top line. So that's our ad pro. In terms of volumes, if you look at our volume growth, have been in the range of around 5.7, which is industry-leading volume growth, and we want to maintain a similar volume growth going forward in next year and in the quarter also.
So on a CAGR basis, we can see around 5 to 6% sort of volume growth going forward, right?
That's right. Because of the base effect, this quarter was low. And even January, last year, basis was last phase of COVID happened in the month of January. Therefore, the bases are high in January for Chyawanprash also. But going forward, I think it should all even out.
All right, we take that point. Badshah Masala, does that get consolidated in the fourth quarter or the next fiscal? And now that you've had, a couple of months to work with it already, have you, some visibility on the kind of revenue and margin synergies that you can extract over and above the 100-200 basis points that you had spoken about earlier?
Yes, the Badshah will be consolidating in quarter 4. Actually, from January onwards, there will be consolidation which will happen. So Jan, Feb, March will be the first quarter of consolidation happening. Going forward, we are still in the process of making the budget. It's difficult for me to tell you how much the numbers would be, but broadly, Badshah is in the range of around 240 to 250 crores fiscal year close, and margins in the range of around 20% broadly. And we are doing the budget, so exactly can't tell you what the numbers will be in the next fiscal.
All right. And what about the performance of your earlier new launches, baby care, etc.? I mean, have you seen any sort of traction out there? Because we don't see much in terms of detailing out there. And while parts of your portfolio did extremely well, you had toothpaste, hair oils and shampoos. All of them were weak this time around. Where do we see improvement there?
Yeah, so as far as the baby care portfolio is concerned, I think that's doing very well. Our Lal Tail, which is a major baby care brand, has registered a growth of 8%. If I club the digital first baby care range that we launched, the growth of baby care is ahead of around 20% for us, and we are exiting at around 20 crores. And you should still remember that it's still being restricted to only e-commerce, and the exit rates are around 20 crore of business. So we are very hopeful about baby care, and as we speak, we've new head of healthcare is joining our company with effect from January onwards. Already joined as we speak, Mr. Hayden. He was the ex-chief executive of Himalaya, who is joining Dabur. So that should provide a major impetus to baby care and also our overall healthcare portfolio.
Right. And you also, sorry, we're running a little short on time. You also had a plan to enter the carbonated soft drink market. Is that a plan on in time for summer 2023?
Yes. So we are ready. So we are creating a facility in Jammu factory where we'll be producing a carbonated beverages, and we are all set to have the new summer season with carbonated beverages, also carbonated fruit drinks actually in the market. And
FY24, do we expect double-digit revenue growth with the 19 to 21% margin band that you speak about?
Around margin band will be around the 20%, and we are going to be back to the pre-COVID levels of margin. That will be there. In terms of exact granularity on the numbers, difficult for me to tell you right now. We are in the process of actually creating our budget. But that said, we'll be gaining market shares, growing ahead of the market. So whatever market growth rates are, we'll be gaining around 200 basis points ahead of the market growth rate to gain shares. That's a long-term plan.
All right, Mohit. Thank you so much for joining in and giving us clarity on the way forward. We will await further clarity from you once you've done with your budgets. Take a short break, come back, get you more on the markets and individual stocks.